A few of the biggest economies in Sub-Saharan Africa are holding policy meetings over the next 2 weeks, with the likes of Ghana, Kenya and Angola holding meetings before the end of the month. Higher oil prices and also drought seems to be a big contesting factor in an inflation rise. However, for my discussion today, we look at the prospects and the outcome of two of the largest economies in Africa holding MPC meetings this week. That is Nigeria and South Africa. And to discuss the interest rate expectations for this week, I am joined in studio by Matshego, who is an economist at Nedbank. But first, let's cross to our West Africa team to look at Nigeria's MPC happening today. Ken, exciting times there for you guys, but I'm reading that most economists don't quite expect a change in interest rates this time around. What are they saying on the ground there?
Well, it's the general consensus in Nigeria as well, because when you look at the last decision by the MPC meeting in Nigeria, the last meeting, the central bank, cut the monetary policy rate by 50 basis points to 13.5%. And that was, if you look back before that date, the last time any decision was made on rate cuts or in fact any adjustment on the parameters was sometime in 2016. So it's been quite a while coming. So we cannot expect that, and the central bank signal that, okay, going forward, they're taking a new direction. They are leaning towards growth rather than trying to tackle inflation. And when you look at it, although we saw a slight uptick in inflation to 11.37% in Nigeria, we still think that that's still not enough to make the central bank move. I think they're going to adopt a wait-and-see approach and see how things play out from the last decision they made at the last meeting.
Yeah, I mean, but in terms of growth, though, numbers out of Nigeria recently showing that growth had slowed down in the first quarter. I mean, what do you likely expect the central bank to say about the slowing in growth? Do you expect them to be concerned, or do you expect them to maintain their target that 2019 Nigeria's economy will grow by 3%?
Yeah, because when you look at the longer term, the 3%, that's still, regardless of the slight drop in GDP numbers for the first quarter, when you compare it to the fourth quarter, it's still always also very good to note that when you look at on a year-on-year basis, this is still the 2.01% recorded in the first quarter of 2019. It's still the best first quarter growth we've seen since 2015. So as much as it's not as much as the Q4 growth from last year, it's still better than what we've seen in most first quarters in here. And don't forget that in the first quarter of this year, we had an election in Nigeria, and then we've had some, insecurity issues as well.
Well, Ken, I know you have to get ready for Power Lunch West Africa, so I will leave it there with you. That was my colleague in West Africa, Kenneth Igbomor. Of course, Isaac is still in studio with me. Isaac, what did you make about what Ken had to say regarding the positioning of Nigeria's central bank? How do you see them deciding on rates today?
Yeah, I mean, at the last MPC meeting, which was in March, they switched to what they referred as a pro-growth stance. Okay. But of course, they did highlight structural upside risks to inflation, mainly due to high energy prices and infrastructure constraints. So they are probably likely to keep rates flat for the rest of this year. But of course, the strong dollar inflows into the Nigerian economy could prompt them to cut further, as there's support for the exchange rate, for instance.
So, flat for Nigeria. Are you with the consensus forecast here in South Africa that Governor Lesetja Kganyago is also not going to move on rates this time around?
Absolutely, and we are expecting rates to remain flat for the rest of the year.
All right.
Tomorrow we're going to get the inflation number. We expect a flat number like 4.5%.
Even with the recent increases that we have seen in energy prices, and even with pressure coming from food prices.
Those coming from petrol prices, but we saw, for instance, diesel prices being flat. Yeah. And actually, when you look at the numbers for this month, the increases for the coming month, we could see a slight decrease in the petrol price and a small increase in the diesel price. So going forward, I mean, depending on what happens to the rand, and remember that the rand now has got some support because of the post-election certainty. We've seen the outcome of the elections.
For now, until he names his new cabinet.
Absolutely.
You know, Isaac, in terms of Nigeria and South Africa, so as Ken was saying, growth slowing in the first quarter in Nigeria, but still, you know, the best growth that they've had in a very long time. Whereas with us, I don't know where the Nedbank house view is. According to APSA, we could see a contraction of around 2.2% in the first quarter. What are your forecasts? And also, I mean, how does the central bank governor maintain interest rates when growth is so fragile? Shouldn't he be cutting?
Yeah, we're looking at a decline of about 1.5 for the first quarter, and that's primarily due to the power shortages that are rather stage 4 load shedding that we went through. And the question is, you know, can the central bank really respond to that? Is that within the ambit of the central bank? We believe that it is not, because these are structural challenges to growth. Those can be sorted out by industrial policy, by fiscal policy to some extent, and we believe that the central bank should focus on its mandate, which is price stability.
But are you worried, though, that mandate may change? Now you've got the ANC in power. Cyril has his mandate. In his manifesto, he did say that we were looking to broaden the responsibilities or the focus of the Reserve Bank to, yes, look at that inflation, but also balance that along with growth. Are you worried?
The question is, how much and how far can monetary policy go in stimulating growth in South Africa right now? Very little, because our challenges are structural. We need to address the structural impediments, deal with the electricity shortages, deal with problems in the labor sector, for instance, the supply of labor, you know, the flexibility of the labor market that needs to be addressed. Then
as in they can't strike willy-nilly when they want to.
Absolutely, we need.
No, go ahead, because of course on the labor front, it's not they just wake up and they say, okay, no, I'm going to strike. There are grievances, like we're seeing with Amplats right now. Certain changes to medical aid benefits from the former employer Glencore that motivated that strike action, although unprotected, you're right, but it's both need to come to the party here, labor and corporates.
You know what, I'm not an expert when it comes to labor issues, because these are often socio-political. But I believe that, you know, we need to have social cohesion in South Africa. Understand that we got to grow the economy, we got to keep output growth stable, because, you know, work stoppages disrupt output in the economy, and even the workers do suffer from every work stoppage. So we need to sort of find a new approach of dealing with the challenges within the economy, because this, you know, frequent work stoppages are not going to benefit the economy.
Yeah, and I mean, we've seen what they do to shareholders or companies' profits. But Isaac, I mean, obviously South Africa doesn't live in a silo. We're very much impacted by what happens elsewhere. How worried are you about these trade tensions between the US and South Africa? And to what degree could it be a real problem for us, even if we do get our own things right internally?
You know, our key worry is the likely impact on global sentiment. This trade war between the US and China could slow global growth, you know, at a larger margin, or rather result in a larger slowdown in global growth than anticipated at the moment. And that could trigger some sort of global crisis. And you know, we are a very liquid emerging market. Once there is a global risk event, the rand could come under a lot of pressure, as we see, for instance, portfolio outflows. And with a much weaker rand, the Reserve Bank, for instance, could be in a bit of a corner, in the sense that it would have to respond to the risk of much higher inflation.
Talking about a crisis, Jerome Powell last night mentioning the fact that, I mean, US company debt levels is historically high. Concerns about whether the high level of US debt that we're currently seeing is enough to spark a crisis like we saw in the 2007-2008, a crisis that was a result of all that mortgage lending and all that. He says you can't really compare the two. Do you share his view?
Well, it's the question, you know, that we're pondering right now is, what's going to trigger the next global financial crisis? Because remember, you know, periodically we do get these global crises. And what's going to trigger the next one? Is it going to be, for instance, U.S. corporate debt levels? Is it going to be financial debt levels in China? Or is it going to come from emerging markets, whatever form it's going to take? I don't know. I cannot say to you that's going to be the source of the next global financial crisis, but it's going to come from somewhere.
And it's going to hit everyone hard.
Absolutely.
Isaac, we'll leave it there for now. Thanks so much for your time. Always a pleasure. Of course, I was in conversation with Isaac Matshego, who is an economist at Nedbank.